Good morning and welcome back to Almus Market Mornings. We pick up the threads from the last Fed meeting. There was a single dissent by Governor Miran who wanted a larger cut, but Chair Powell was largely able to rally everyone behind him. This time round, though rates are lower by 25 basis points, it seems Chair Powell is facing an increasingly divided committee. There was a dissent by Governor Miran to lower rates further, and a dissent by Kansas City Fed President Schmid, who preferred not to cut rates at all. Even Chair Powell's language was that of caution, and he clearly said that a rate cut in December meeting is not a done deal. Good morning, JK. I think a slight surprise for the markets with the tone Powell used. What do you think?
Good morning, Swaraj. Yes, there was a dissent, uh, but two people dissenting from the decision, but that was less significant compared to what Powell was saying, and he has clearly said that there were strong differing views about how to proceed in December, and a further reduction in policy rate is not a foregone conclusion, and that the policy is not on a preset course. So that was, some surprise for the market, which was almost 100% probability discounted for a cut in December as well. Another negative surprise was slightly negative, I would say, is the date of ending QT that is set to December 1st, as against November 1 that the market was expecting. Basically, it was expected that it would end immediately. However, the QT ending has been confirmed. So the impact was that the traders have now sized down their expectation of a Fed rate cut in December by to 68%. As I said earlier, it was close to 100%. Then, of course, otherwise, Powell was quite neutral on the economy. In fact, the Fed statement itself said that available indicators suggest economic activity expanding at a moderate pace, and job gains have slowed. Unemployment rate has edged up, but is still remaining low through August. He's also kept options open. I'm not really seeing it as a very negative statement. Who knows if there is a bigger impact on the economy? Instead of quarter, we might get a 0.5% cut also, but that is only when we get an update on the economy. Even as now we are entering, the fifth. We have entered the fifth week, and soon we will be completing 1 month of shutdown. So that is something I think market has realized that it's not too significant in the absence of economic data. Therefore, whatever the reactions were there, that has been partially reversed, both in the dollar and in the bond market as well. Yes. Otherwise, yesterday was even more significant. Event was seen in that Bank of Canada also cut rate by 0.25%. That was also mostly expected, but significantly they signaled an end to its cutting cycle after the rate had fallen to the lowest level from July 2022. So despite the rate cut, Canadian dollars actually shown some strength, having traded weak all through this rate cutting cycle. So that event was also, something of significance for the rates market. So we can see that ECB is also likely to hold rate, not cutting any further. Uh, Canada looking at rate cut cycle ending. We have had Australian CPI earlier in the day, which also put doubts about any further rate cuts in Australia. So we're slowly moving into that neutral zone as far as the rate cuts are concerned. But the biggest gap that we have is an update on the US economy. That is when we should be able to get or where the US rates are moving and where the US markets will be moving always. However, in the absence of US data, we have enough on the plate today. We have in less than an hour, we will have a Bank of Japan meeting on the monetary policy. Significantly, as I pointed out yesterday, um, Treasury Secretary himself has indirectly hinted at the Bank of Japan needing to hike rate to see that inflation is also kept under control. So whether Bank of Japan reacts to this with their action, market is not expecting that to happen. But we have also a press conference by Ueda ahead of the meeting outcome as well as later in the day. So his statements will be closely looked at for what lies ahead for the policy. Then, of course, the most important event from my point of view is the meeting between President Xi and President Trump in Malaysia. Markets already expect that the ceiling for the tariffs is perhaps not going to be raised. It is in place. Perhaps there can be some moderation. China is likely also to back down from its latest rare earth export control announcements. These could be seen as positive. Of course, they are expected, but it will be a relief for the market to see that the trade war is mellowed down. And so I think that will be positive for the market. That's why we have already seen markets reverse some of their negative reactions yesterday after Powell's statements. Also, we have enough on the plate from Eurozone today. We have a preliminary GDP estimate from major economies of France and Germany. Unemployment rate from Germany as well. Preliminary reading on inflation from various German states as well as German economy as a whole. Apart from GDP estimate for Europe and Germany, so enough on the plate. But to top it all, we have ECB meeting lined up today. Again, no expectation that there will be a change in the interest rate by ECB. Current rate, policy rate now stands at 2.15%. Their statement on future guidance will be very important as well as outlook on inflation growth. So inflation, if they look at inflation as having bottomed out, indirectly it will be seen as ECB rates also seeing bottom. So we have enough on the plate today. Apart from the digesting the Fed statements of yesterday, as for the market reactions, there was a fall in almost all the indices in US immediately after Powell's press conference. But interestingly, Nasdaq never went into negative territory. Significant event was Nvidia hitting a 5 trillion market cap mark for the first time. So that's showing how the tech stocks in US continue to do well despite the various challenges that the economy is facing as well. As far as the bond market is concerned, there was a big jump in yields across that curve. 2-year actually rallied almost 12 basis points, and then the 10-year also closed 9 basis points during the after the market session. As far as the dollar is concerned, we had euro dipping to 1.0580. Even the GBP was at 1.3160 at peak of the dollar recovery. But then all of them have recovered since then. More focus is on the Trump-Xi meeting outcome, BOJ policy, and also the ECB policy, as well as the European data ahead. So dollar still is in the range. Yen will be very interesting depending upon what BOJ does, or even if they don't do anything, what Ueda says about the policy going forward. I can expect some sort of a hawkishness in his statement, tonight. Then, of course, on the domestic market yesterday, we had the rupee again slightly trading on the weaker side, not weaker than the earlier day, but still, it was not hurrying to recover. The month-end demand was definitely seen, keeping the dollar well bid for the day. But what I can see is that actually what I heard from the market was that the PSU banks were on both sides, which indicates to me that while there was commercial demand even with the PSU banks, that was being met with supplies from other PSU banks as well. So keeping the market in tight range, and when the dollar rupee tried to break around about 88.45 after Powell's remarks. Again, it has come off, which means that I presume possibly the central bank could be active in the offshore market as well. For the rupee, I think once the month-end demand is over, possibly we can see some retracement. Let's remember that rupee is already undervalued, and don't expect a big jump in the dollar against INR unless we have any big risk-off event in the global markets, or if the dollar, for any reason, rallies towards 99.50 or 100. Otherwise, I think overall currency market still not showing any directional bias. Thank you.
Thank you, JK. And I think what we need to now look forward to after yesterday's Fed meeting is, of course, the meeting between President Xi and President Trump. That's going to be a major event, major political event. And in fact, yesterday, actually, JK, I was reading on Bloomberg that the China has started its first batch of purchase for soybeans. That was a big
Okay.
political issue over there in the
Okay.
US because they were not purchasing soybeans.
Mm.
They were
Mhm.
purchasing from other South American countries. So they started it yesterday, maybe as a gesture of good faith going into the meeting.
Mhm.
Uh,
Mhm.
then, of course, we have the ECB meeting. They are not expected to act on rates, but future guidance to look forward to. And the BOJ decision. Interestingly, U.S. Treasury Secretary Bessent has been quite vocal on what he's sort of expecting out of the BOJ, and he is expecting BOJ, that they need to raise rates to tame inflation. But as of now, markets are not pricing any sort of hike in today's decision. Otherwise, dollar rupee remained in a tight range. There were good month-end demand as well as supplies by PSU banks. That's it from us. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.